Hey, what's up, YouTube? In this channel, I want to talk about investing in real estate investment trusts or REITs. And I'm going to give you guys some of my picks for today's market. If you're new to the channel, my name is Dan. I do a lot of investment advice on this channel, a lot of stock analysis. So if you're into that kind of thing, please hit that subscribe button so you can check out more videos like this one. Okay, so investing in real estate investment trusts or REITs. There's a few things you got to know before you invest in REITs. Number one is the taxes. They're taxed very differently than stocks. You can buy and sell REITs just like stocks. They're on the exchanges, but they're very different for taxation. So with REITs, they actually don't pay any corporate income tax. That's just awesome. That's just a nice thing about them. The other thing about them, though, is that when you get money from REITs, like dividends, they're taxed at a higher rate. You're going to be taxed like ordinary income. So depending on your tax bracket, that could be a lot higher than the rate you pay on dividends from other stocks. So for that reason, when you invest in REITs, generally speaking, you should do so in your retirement account. Second thing you got to understand about REITs is that they are required by law to pay out 90% of their profits every year as dividends. So they're the type of investment that is really loved by a lot of retirees for the big fat dividends you get, and it makes them easier to compare. Third thing you got to know about REITs is how to value them. They're very different than stocks because we don't use the PE ratio. We use the P to FFO ratio. Now, FFO stands for funds from operations, and among REIT investors, it's the most widely used measure to assess profitability, rather than using their earnings or net income. Okay, so why should you want to invest in REITs in 2021? Well, I'm going to give you a few reasons. Number one, inflation is a major concern right now. Fun fact, guys, 35% of all the currency in circulation was printed in the last 10 months. Does that scare you? It probably should, guys. Inflation is a real concern right now, and one asset that is an inflation hedge is real estate. And if you can't afford a house or multiple houses, a great way to invest in them is through REITs. You get to be a landlord. The other reason to consider REITs, guys, it's not just an inflation hedge. REITs actually have produced the best return among any asset class over the past 20 years. Look, here's a sorting of the best returns based on asset class for every year for the past 15 years, guys. Notice this one here, REITs. REITs keep showing up as the top performer in a given year. Okay, so as far as which REITs to buy, if you really don't know, you can always buy the Vanguard Real Estate Exchange Traded Fund, VNQ. The expense ratio is rock bottom, 0.12%. It pays quarterly. It yields close to 4% right now. It's very diversified. Now, if you're into international real estate, which is not a bad idea, hedge yourself further, protect against currency fluctuations. I personally like this one right here, RWO. It's the Wilshire Global Real Estate ETF. The expense ratio is a little bit higher, 0.5%. It yields about 3.31% right now, but it's very deeply discounted compared to the price it was at earlier in the year. Now, as far as my personal REIT picks, I'm not going to go in depth on every one. I'm kind of going to go through them quickly. But one of my top picks is the Simon Property Group. I did a REIT video a few months ago where I emphasized that I really like this stock. Since then, it has gone up a lot. Is it still a buy? I still say so. You got a price to FFO ratio of 9.1, a dividend yield of about 6%. Now, the stock is controversial because they own a lot of retail space. Some people think retail is dead, So if you buy this stock, understand you're kind of making a bet on things to return to normal in the post-COVID world, which is a bet that I'm generally making, but I want to make that clear because some people don't feel that's going to happen. Another one I like here is WP Carey. This one is based overseas, and so you got some currency diversification there. The price to FFO ratio is about 14.87. Not as good of a deal, but it is safer, and it yields close to 6%. Excellent investment to consider. If you're looking for a growth stock, this is one of my favorites right here. You got VC Properties. They are an industrial REIT. So they lease out industrial space. They charge rent for that. They're yielding 5%, and the price to FFO ratio is 15.44. So honestly, guys, even if they don't grow after this, it's not even a bad deal. You get value and growth here. I love this one. Another one that I'm long on is Care Trust REIT. So they own a lot of hospital space and retirement homes, things like that. They got a price to FFO ratio of about 16. They're yielding about 4.5%. And then you've got Cousins Properties here. This is an office REIT. So again, this depends on how much you think things are going to return to normal. But if you believe in that, this would be an excellent value here, trading at just 12 times their funds from operations and yielding about 3.5%. Okay, guys, so to conclude, if you invest in REITs in your retirement account, you pretty much overcome the taxation issue with REITs, making them an excellent investment. You hedge against inflation, and you're looking at an asset that has outperformed all other asset classes over the past 20 years. With the amount of money the Fed is printing these days, I feel a lot more comfortable owning things like REITs, and I've made them a big part of my retirement account. So as always, do your own research, see what you like in the REIT sector, but I wholeheartedly recommend them. Thank you for watching. Hit that like button. It helps me a lot. Thank you.